Let's talk about whether or not commercial loan rates will go up in 2019. Hi everyone, thank you so much for joining me. Welcome to the video series. Today I want to talk to you about whether or not commercial loan rates are going to increase in 2019. Now, if you follow the stock markets or any of the markets at all, you've probably seen the volatility that's been going on, particularly at the end of 2018. And that's because in 2019, well, actually in 2018, the reason we were having some challenges, and we continue to, is for a variety of reasons. One of those is going to be the potential trade war with China. We're still dealing with difficulties there, but there's a lot of other factors going on. And one of those has been the discussions about what the Fed is going to do about interest rates in 2019. Now, back then, prior to the holidays, a lot of the analysts anticipated that we were going to see 3 to 4 interest rate hikes just in 2019. Now, in November and then in December, the Fed met and decided not to raise rates. Economic indicators were pretty good across the board, but they were seeing some stress, so they decided to hold off. However, there still is the very good chance that in 2019 we'll see a few interest rate increases. Probably not the 3 to 4 that they were talking about, but most likely we'll see 1 or 2 upticks in those interest rates. And usually when they do that, that's 1/4% at a time, so 0.25%. So what does that mean for business loan and commercial loan rates? Well, business loans and commercial loans, lenders who make those typically tie their loans to an indice of some type. So that could be the Wall Street the Wall Street Journal prime rate. That could be a rate called LIBOR, which is a London-based index. Some of the banks and lenders follow treasuries and then tie their rates to that. And what I mean by tie to that is, let's say that that indice is at 3%, and they know they want a 3 or 4% margin on top of that 3%. They'll add that together and they'll end up at, say, in this example, 7% interest rate. Now, each of those indices doesn't necessarily directly follow what the Fed does with interest rates, but not directly. Notice what I'm saying. However, typically, historically, they have followed pretty much in lockstep with what the Fed does with interest rates. So a good example is LIBOR historically has almost followed the federal funds rate to a T. If the federal funds rate goes up, the LIBOR goes up. And the difference has really only been about 0.1%. So it's pretty close. So these indices that the banks and lenders tie their rates to that they pass on to you are not necessarily tied directly to the federal funds rate, but you can almost be assured that if the federal funds rate goes up, your interest rates are going to go up. So it's almost a guarantee. Now, there's one place that this really matters and another that it may not. If you have what's called a variable rate loan, so think of like a credit card, if rates go up, you're going to see pretty quickly on a variable rate loan your interest rate go up as well. So maybe you have a working capital line of credit that is a variable rate with your lender. If the federal funds rate goes up, then most likely the indices that line of credit is tied to is going to go up, and then therefore you're going to see an increase. If you have a fixed rate loan where maybe you've bought an asset like some real estate or equipment or something like that, most likely that rate is going to stay put until the loan term, the length of time that they guaranteed that rate, expires. So what I mean with fixed rates, or something you should think about with fixed rates, is now could be a good time, if you're put in a position to do so, to refinance that loan and go ahead and lock it in at today's rates instead of waiting until later in the year when rates start to go up again. I probably should have looked it up and probably should know it offhand when the Fed's going to meet again. I think it's probably going to be at the end of this quarter, so it'd be around March or April. And I'm not sure if they're going to raise rates then, but I do think by around the summertime we could probably see rates go up as long as the economy's holding steady. So you've got between now and then to take those loans and go ahead, those fixed rate loans, and go ahead and get them refinanced and lock in a better rate. So will commercial rates go up in 2019? You can almost bet that they're going to. Again, some indicators could come back that could change that, and the Fed could hold off, but we're pretty assured that that's going to happen. Go ahead and plan for that in your business. If you're needing a loan or you need to refinance a loan, now's the time to get it done. I hope that helps. Have a great day.